I want to start by showing you something. This is NVIDIA's stock chart over the last 21 years. In early 2020, right when the pandemic hit, right when most people were panicking, you could have bought NVIDIA for roughly $7 a share. Today, it's trading at $200. That's over 28x return in 6 years. Not from crypto, not from a meme coin, from a company that makes computer chips. And right now, in the middle of what NVIDIA's own CEO calls the single greatest platform transition in the history of computing. There are companies sitting exactly where NVIDIA sat in 2020. Real revenue, real growth, real technology, trading at prices that still make a 5x, 10x, or 20x return mathematically possible. The question isn't whether AI is a real trend. At this point, that's not a debate. The question is which companies are going to turn that trend into the kind of returns that actually change someone's financial life. Today, we're looking at 5 of them. My name is Say and I cover crypto, investing, and personal finance, including the AI stocks that actually have the data behind the story, not just the hype. If you want research-backed ideas rather than just a recycled NVIDIA recommendation, hit subscribe and give this a thumbs up if this helps. Before we go anywhere, one very important note. Not financial advice, research ideas only. AI stocks carry significant risk, high upside, and high downside. Never invest money you can't afford to lose. Every stock on this list carries real downside. I'll tell you what those risks are because my job isn't to get you excited, it's to give you an honest picture. Let's look at the framework first, before the picks. Here's a piece of data that most people who talk about AI stocks never mention. In April 2005, when NVIDIA was a small graphics card company most people had never heard of, $1,000 invested in the stock would be worth approximately over $1 million today. Not from the last 6 years, from 2005. 21 years of holding one company that most people weren't even watching. Here's what most people don't realize. NVIDIA didn't look like NVIDIA in 2005. It looked like a small tech company with a niche product, trading at prices that seemed speculative to most analysts at the time. The pattern that made NVIDIA a generational wealth builder wasn't that it had the best story. It was compounding free cash flow. Revenue was growing, cash generation was accelerating, and the technology it was building turned out to be needed not just for gaming, but for AI, data centers, autonomous vehicles, and everything that came after. Okay, here's the pattern. Revenue compounding, plus expanding addressable market, plus the technology nobody else can replicate is equals to millionaire maker stock. Keep that framework in your head. We're going to apply it to every stock on this list. Number 1 is NVIDIA. I know you've heard about NVIDIA, but I want to show you something most people aren't paying attention to about where it's going, not where it's been. Wall Street analysts project 77% revenue growth for NVIDIA this year alone. Revenue exploded to $216 billion in 2025, up to 65% year over year. And the next generation Rubin platform is expected to roll out in the second half of 2026. A new product cycle that hasn't even started yet. Here's the thing, most people look at NVIDIA's almost $5 trillion market cap and think the opportunity is over, and maybe on a 1-year basis they're right, but on a 6-year basis, OpenAI alone projects $54 billion in revenue by 2027 and $125 billion by 2029. Anthropic projects up to $70 billion in its optimistic 2028 scenario. Every dollar of that AI model revenue runs on infrastructure, and most of that infrastructure runs on NVIDIA chips. The addressable market isn't shrinking, it's multiplying. NVIDIA is the rails the entire AI economy runs on, and the trains are just starting to accelerate. However, at $5 trillion market cap, any growth disappointment gets punished severely. This is not a safe, boring stock. Number 2 is Alphabet. Here's something that surprised me when I dug into the actual numbers. In the first quarter of 2026, despite years of people predicting that AI chatbots would destroy Google search, Alphabet's ad revenue climbed 19% to over $60 billion in a single quarter, and Google Cloud revenue increased 63% to $20 billion, largely driven by enterprise AI solutions. Alphabet has a market cap of $4 trillion. That sounds enormous, but here's the thing. It's growing at the rate of a mid-cap company. Ad revenue up 19%, cloud up 63%, and it controls the most used AI assistant in the world through Google's integration across Search, Gmail, Docs, and YouTube. Google Cloud at $80 billion annualized and growing at 63% is the number most people are ignoring while they debate whether Google search is dying. Well, it isn't dying, it's compounding. The risk? Regulation. Alphabet faces ongoing antitrust scrutiny in the US and Europe. A forced breakup or search monopoly ruling is the single biggest tail risk for this stock. Number 3 is SoundHound. Now, this is the one that people either love or dismiss immediately, and I want to give you the honest version of both sides. SoundHound AI reported first quarter of 2026 revenue of $44.2 million. This is up 52% year over year. Full year 2025 revenue was $168.9 million, up 99% from the year before. And management is guiding for $225 to $260 million in 2026. That's roughly 54% growth at the high end. This is what the NVIDIA 2005 pattern looks like in 2026. SoundHound currently has almost $3 billion market cap. The Motley Fool called it out. Even reaching a $30 billion market cap would be a 10x return from today's price. And in June 2026, it was named the overall Agentic AI Company of the Year in the AI Breakthrough Awards. SoundHound's OSS platform is voice-first agentic AI, the kind that lets you speak to a restaurant drive-thru, an in-car assistant, or a customer service system and to get human-level response. It's deployed across major automakers and retailers, and its planned acquisition of LivePerson will bring it deeper into enterprise. Here's where it gets really interesting. 96% of organizations in a 2026 study reported that agentic AI deployments met or exceeded ROI expectations. This is no longer a technology in testing, it's in production. SoundHound is still not profitable, it's burning cash. It must avoid diluting shareholders with large stock issuances to raise money. If revenue growth stalls before it reaches profitability, this story ends badly. Okay, I'm not telling you to bet your life savings on this. I'm telling you it has the pattern. Fast-growing revenue, large addressable market, technology nobody else has fully replicated. That preceded some of the biggest returns in tech history. Number 4 is Broadcom. Broadcom is doing something very different from NVIDIA, and for some investors, it's actually more interesting. Where NVIDIA builds GPUs that can handle almost any AI workload, Broadcom builds ASICs, application-specific integrated circuits, custom chips designed for one specific customer's AI needs. They are more efficient than GPUs, they are cheaper to run, and the hyperscalers Google, Meta, Amazon are ordering them at scale. Broadcom's AI revenue is growing rapidly as the major cloud companies move to custom silicon rather than off-the-shelf GPUs for their largest workloads. This is a structural shift, not a trend, because as AI scales, efficiency matters more than raw power. However, Broadcom is a large company already. Returns at this market cap tend to be measured in percentage points, not multiples. This is a quality compounder, not a 10x candidate in 5 years. Number 5, Arista Networks. Last one, and I saved this one for the end because it's the most underrated stock in the entire AI infrastructure chain. Arista Networks reportedly approximately 28% annual revenue growth, hitting roughly $9 billion in 2025 sales. And management raised its AI networking target from $1.5 billion in 2025 to $2.75 billion in 2026. That's an 83% increase in AI-specific revenue in 1 year. Here's what most people don't realize. Every AI model that trains or runs in a data center needs ultra-low latency, high bandwidth networking to move data between thousands of chips simultaneously. Arista is the dominant provider of that networking infrastructure and is already seeing design wins at multiple major cloud providers and AI model builders. The analogy, NVIDIA makes the engines, Arista builds the roads those engines drive on, and right now, they are paving roads faster than any competitor. However, enterprise networking is a slow-moving procurement cycle, a slowdown in hyperscaler capital spending, which is showing some early signs of normalization, could delay Arista's AI revenue growth. Alright, 5 stocks, here's how to actually think about positioning across them. Number 1, Core. 60 to 70% of your AI allocation, NVIDIA and Alphabet. Large companies with proven revenue, massive moat, and the ability to survive a downturn. These are your anchor positions. Number 2, Growth. 20 to 30% of your allocation. Broadcom and Arista. Strong fundamentals, AI-specific revenue growing fast, but more mature than small caps. These compound steadily rather than the moon. Number 3, speculative. 5 to 10% of your allocation goes to SoundHound. Position size this for the upside, not for the income. If the thesis plays out over 5 years, a small position becomes meaningful. If it doesn't, you protect your core portfolio. The mistake most people make with AI stocks isn't picking the wrong names, it's sizing everything like a lottery ticket. The goal is to own the AI story in a way that survives the inevitable volatility. Because the path from here to 5 years from now will have multiple 30 to 40% pullbacks in these stocks along the way. The investors who build wealth through this cycle won't be the ones who picked perfectly. They'll be the ones who sized correctly, held with conviction, and didn't panic at the first correction. Here's the honest summary. The AI build-out is real, the revenue is real, OpenAI is on track for $54 billion by 2027. Anthropic is targeting $70 billion by 2028. Every dollar of that AI revenue runs on infrastructure. And the 5 companies we covered today sit in the most durable positions in that supply chain. NVIDIA is the engine, Alphabet is the platform, SoundHound is the voice, Broadcom is the custom silicon, Arista is the networking. None of this is guaranteed. Technology shifts, competition intensifies, regulation happens, but if the AI build-out continues at anything close to the current trajectory, the investors who own these companies through 2031 will be telling a very different financial story than the ones who watched from the sideline. You're watching this video, that already puts you in a different category than most people. If this gave you a clear picture of the AI opportunity, please hit the like button. It genuinely helps more people find this content. Subscribe and hit the bell. I post every week on crypto, AI stocks, and personal finance. Drop a comment below which of these 5 is already in your portfolio and which one are you researching next. I read every single comment. See you in the next video. Bye!